Gentlemen, it is that time of the week where we dive down into my 371K stock portfolio, currently yielding about 9,500 in annual dividends. I'm way down on dividend income from where I was making $1,000 a month because I made this pivotal decision to do broad-based index funds between the US and Canada. But more prevalently, as we take the overview of my portfolio, I'm going to share with you not only the stocks I traded this week, but my crypto account, which I haven't really updated you guys on as I've been getting aggressively back into Bitcoin. But I wanted to show you how I've traded it over the year to save myself some potentially huge losses, and now I'm trying to take opportunity back to the upside if we are seeing bottoms in Bitcoin, which you can always subscribe to see how this works out for me. But nonetheless, hit that like button, folks. First and foremost, let's talk about the broad-based markets. What is going on this week? The S&P 500, guys, showing a little bit of solace here. You know, we're seeing a rebound up 3.45%. Is this the end of the bear market? Have we finally hit bottoms, or is this a dead cat bounce? You know, a bear market rally only to lead to further declines next week. Nobody knows, but I'm definitely buying because these prices are getting juicier and juicier every week, baby. But on a year-to-date basis, if you tapped on that 8% inflation rate, the S&P is still down about 25%. The NASDAQ up 5.8% this week, but again, year-to-date down 26%. Tap on the 8% inflation, well over 30%. And then finally, my Canadian brother out there, we're taking a look at the TSX Composite, which is currently flat for the week, up about a half of a percentage here, but on a year-to-date down about 10%. So this is kind of just the markets, you know, another day of insanity. Do you think this is the bottom? Let me know in that comment section below. But taking a look at my actual portfolio, which I've been using this new portfolio tracker brought to you by globalpredictions.com. It is completely free. It saves so many hassles that are involved with this spreadsheet. So I'm leaving the link in the description below if you guys want to try this out for your own portfolio. But we can see my net worth sitting at around 371,000. It has been coming back pretty aggressively, only primarily because I've been stacking so much cash. I'm getting close to a 50K cash position, again, largely related to tax circumstances I am still dealing with. But taking a look at the exposure, some of the things I'm worried about, and then we'll talk about what I've been buying. Nonetheless, guys, my largest holdings by far sit in the financial sector right now, and that is because of the two major ETFs I hold, being the dividend ETF, VDY on the Canadian side of the border, and VYM on the US side of the border. Both these ETFs have large exposure to financials. So when I'm having about a 23% sector exposure, that's a little beyond my comfort zone. And the way I'm going to start moving away from financials is just by continuing to cost average into the S&P 500. And I'm still potentially over the next week or two looking at starting to add the QQQ ETF, again, just depending on my sentiment on the market moving forward. But nonetheless, right now I need to get information and technology up, still sitting at about a 10% weighting, right? Which also buying the S&P 500 will bring that up. But from an individual holdings perspective, as all these ETFs kind of come together, a lot of them overlap with individual stocks. At the top weighting, 3.5%, my largest position being Royal Bank right now, again, only because it's so largely weighted in VDY, followed by Toronto Dominion Bank, and then my REITs, Smart Centers, RioCan. I am still contemplating the idea of adding Northwest Health Properties to diversify my REIT sector a bit. I haven't pulled the plug there yet, but I'm heavily considering it. And then, of course, Enbridge, Bank of Nova Scotia, Canadian Natural Resources. We got Apple, Microsoft down toward the bottom weightings here. And then finally kind of getting into the crypto, the Amazon, and everything else that is mostly larger weighted on the S&P 500. So putting the portfolio itself here aside, just from these weightings, which right now I'm about 53% the US, 32% Canada, and then finally about 12% sitting in cash, I have been, and I'm going to continue to be buying week over week the S&P 500. This is one of my primary buys right now. Very boring. I know it's not entertaining, but it's the easiest place for me to park money without having to manage it with the personal circumstances currently existing in my life. And again, from an individual holding perspective, over the next month, I am going to be taking some aggressive moves. I don't want to get into that right now because the most aggressive thing I've been doing, some of you might think this is a sad thing I'm doing, but I am buying Bitcoin relatively aggressively to try and pick up the shares that I sold. Back in, February, March, I did a huge liquidation of my higher risk investments, and Bitcoin was one of them. And I'm going to share with you down below the actual trades, the buys and sells of my Bitcoin positions, because back in March, I was liquidating thousands of dollars of Bitcoin, and this has largely worked greatly to my favor. Now, from the all-time high, which I wasn't buying Bitcoin at its all-time high, but I was buying it when it was a lot higher. And then coming into March, it did drop down to this 49,000 range. This is in the Canadian dollar, so keep in mind this isn't US. You might be thinking, oh, Bitcoin's at 28K. No, it's like down closer to the 22 level, but this is just because it's converting to CAD. But nonetheless, I did sell, as you can see down in that little the buying and selling that I did in the trading account. I did sell a lot of Bitcoin, over half the position back in March. And now that Bitcoin, from the time I was selling it, has dropped another 40-50%. I don't want to waste this opportunity because, like I said, if you're going to sell at a loss and you still believe in the asset, when it drops even lower, you got to start buying it back, right? So coming into the last month here, you guys can see all my buys down there, and I have been progressively adding $100 or more a week, and I've been getting more and more aggressive down in this 19 to 20K level, or again, from the Canadian dollar version, about 25 to 30K level. And I'm going to continue doing this, probably adding about another $1,000, because basically if it's 50% off, guys, every dollar I put into it now from where I sold it is going even farther. So I am going to keep doing this week over week just to take advantage. And if you guys want to use Shakepay, I still recommend it. It's probably the best trading account in Canada. It doesn't do leverage, so they're not crashing or locking up your funds. And if you deposit $100, you still immediately make 30, and I make 30, so you make an immediate 30% return. Plus, if you log into the app every day and shake it, they're still giving you free Bitcoin. I don't know how they're doing that, but they are. So the link's in the description below. You do have to come and do an affiliate. Even if you don't deposit money, you can still shake your phone and get free Bitcoin just from being a part of the account, which is just mind-blowing to me. But that has been primarily where I've been really focused for growth. I think now is a time to start fixating more on growth over the general broader view indexes, just because everything is so crazy suppressed. I talk about this a lot. So you'll get to see my moves moving forward. All you simply have to do is subscribe. And I want to know what you guys are buying in that comment section below. I'd love to hear about your trades this week. But stay cool, stay awesome, and as always, I look forward to catching you in the next one.